The administration over and over keeps saying that this bill is paid for. Same thing with the Democrats in both the House and the Senate. They're saying, oh, well, it's paid for. Well, obviously it's not. How can you run 10 years of revenue against, in some cases, 1 year of expense and say it's paid for? That's ludicrous. So we're trying to point out what's really in this bill so people understand it, so they'll say, hey, we don't want that. And to stop this whole process, as you say, it's being negotiated. How is it that the public isn't even privy to the negotiation that's going on right now?
The idea that we're talking about the biggest spending bill in history, and no Republican has had any input, no Republican at this very late date, and you correct me if I'm wrong, you're in the middle of this.
That's right.
I'm in the middle of it with agriculture. $85 billion is going to be spent. I don't have a clue. I haven't been consulted at all, nor have any of the stakeholders. No hearings, no whatever. But the idea that we would go forward with this massive bill and essentially do it unilaterally is unheard of.
Well, first of all, you're right. The reason that the Democrats put these gimmicks in here was so that they could get the CBO score that would allow them to move forward. They were hoping that this number right here, the $400 billion cost, was going to be a zero because they were trying to get all sorts of scoring out of their IRS gimmick and several of the other gimmicks. They failed in that. But they can still move forward with the reconciliation bill. And if you look at where the tax gap supposedly is, interestingly, it falls mostly on those making less than $500,000 a year. And I think as you go down the increments, about half of it, roughly 40% to 50%, falls on people making under $100,000 or under. And so it's phenomenal numbers. And that's what the Joint Tax Committee was reporting on in the House report that they made. The fact is that as much as the Democrats claim that their IRS proposals will be focused solely above $400,000, the reality is that is not the case, and that's what the Joint Tax Committee has shown us. And the bottom line is, if they really mean that, then let's let them support an amendment, which I assure you we'll be bringing, that will say you can't do audits from this money on anybody making less than $400,000. Let's see whether they support that amendment when the votes come.
And add to that the SALT provision, state and local tax deduction, which is being increased from $10,000 to $80,000. Clearly, that's to benefit high-income individuals in the states of New York and California. We have 4.4 million less workers in the economy working now than we did in February of a year ago. 4.4 million less. But you've got 10 million job openings right now. You wonder why you got supply chain problems? The Democrat policies are disincentivizing people to go back into the workforce, so that exacerbates the supply chain problems and further increases inflation. And here we are going into Christmas with all this going on. What's the solution that this administration and the Democrats are putting forward? More mandates, more regulations, more taxes, and more spending. Absolutely the wrong approach. Now, CBO has scored this massive tax and spend bill, and they say it's about $1.7 trillion in spending over 10 years. It's about $1.2 trillion in more taxes over 10 years. So about $400 billion in deficit, increase in debt and deficit. But we know that, as Senator Crapo just said, that's not right. That's not even close to right. This bill is full of gimmicks. The revenues in the bill are set up over a 10-year period. You know this. You've seen it. The revenues are set up over a 10-year period, but the spending programs expire in some cases, supposedly expire at the end of 1 year, or at the end of 3 years, or end of just a few years. But we know that those spending programs are not going to expire. The Democrats are going to continue those programs. They've already said they want those programs to be permanent.
And really throughout the country, I hear about inflation in gasoline, food prices. I hear about the labor market, how difficult it is. I hear about open borders. I hear about the supply chain. Instead of addressing the problems that Americans are so concerned about, Democrats are doubling down with bad ideas and then forcing Americans to pay for those bad ideas. Inflation, labor, supply chain, open borders, all of these things are so very important to the American people, and yet nothing is being done about them. This is what working families in America are concerned about. The latest thing that's very much like that is this deal with your banking account. Right now, after you reach a threshold of $10,000 worth of activity, the average American family is $61,000, I believe. then at that point your information starts going to the IRS. It's equivalent to vehicle miles traveled in your checking account. So these are things that we're working very hard to defeat.
It's another example where, unless they're doing as the Joint Tax Committee says they are, which is going into people's bank accounts who are relatively lower income and, creating incredible intrusion into people's lives, they're not going to raise the revenue that they're claiming that they're raising. So it creates a gap on the revenue side. So there's just so many issues like this with this legislation. Part of it is because you all and we have not had the chance to actually sit down and analyze it because we haven't been part of the process and because no committee has been part of the process. So it hasn't gone through the Ways and Means Committee. It hasn't gone through the Finance Committee. So it's a good example. But let me give you a couple others. Senator Hoeven was just talking about the impact of the $80,000 cap versus a $10,000 cap. That in combination with the other provisions in this bill means that millionaires, people making over $1 million a year, are going to get a big tax break here. Over 68%, almost 70% of millionaires are going to get a significant tax cut under this legislation. Those between $500,000 and $1 million, 90% of them are going to get a significant tax cut under this legislation. However, if you're making $30,000 a year, only 30% will get a tax cut, and only in the first year. In the second year, it goes to 12%, third year to 10%, and down into single digits. So think about that discrepancy. The people who are going to benefit from this on the revenue side are the wealthiest Americans, and those who will be hurt are middle-income Americans and lower-income Americans. I'll give you another one that's very concerning to me. There's a 25% minimum tax on the domestic side for companies. It's called a book tax. So they're looking at, instead of the way income tax is calculated by the IRS, they're looking at what your book tax is based on your financial statements. Now, sounds innocent enough, right? As we begin to dig into this, we find out that this is going to affect defined contribution and defined benefit pensions, particularly defined benefit pensions. How? Because those pension plans, if they have an increase in their assets, currently are not taxed to the company, right? Because it's totally separate. So if you have a company that's, let's say making $100 million a year in profit, and yet has in its pension plan a $1 billion or $200 billion increase in the assets, maybe because interest rates have gone up, maybe because the market went up. Now, for the first time, that company is going to be taxed on those increases in the assets on the pension plan. Remember, $100 million over here, you got a $2 billion increase over here. You apply 25% tax to that, you're bankrupt. I mean, what are your choices? You either have to go out and borrow the money to pay your taxes, or you have to say we're going to fold this company. Who does that hurt? That hurts the people that are in these defined benefit plans, which frankly Democrats in the past have always strongly supported. A lot of them are union plans, as you know. And we're encouraging, some of our friends in the union community to take a look at this. This is the impact of this so-called minimum tax. Again, sounds innocent enough, but it really hurts people. Second example might be bonus depreciation. If you're a small business, you've really taken advantage of this, but so have a lot of larger businesses who will be caught up in this book tax. So if you make an investment in expanding your plant or equipment, you can take an immediate write-off. That was in the 2017 bill. It's been very popular. Why? Because it's helped the economy and helped create jobs and economic activity. Under this new tax, this new minimum tax, it takes away that benefit for many companies to be able to get that immediate write-off under the bonus depreciation. I don't think anybody wants to do that. I think a lot of these are almost inadvertent. I can't imagine they would want to. But these are some examples, and you dig into this, whether it's the IRS provision you mentioned with regard to people's privacy and the burdens on individual taxpayers, or whether it's some of the ways these tax increases are going to hurt businesses and ultimately workers. By the way, the Joint Committee on Taxation and CBO and other analysis has said that when you increase taxes on companies, who takes a hit? Workers do, in terms of wages and benefits. 70% of the impact of these tax increases will be on workers. So
originally was all about sustaining our economy. Then this very hot inflation continues to rise, and now suddenly it is, well, this is going to help us fight inflation. And now we're dealing with unemployment issues, and so now the Democrats' line changed to, well, now it's going to help us with employment issues. In reality, what's happening is they're trying to spend more, they're trying to tax more, and they're going to make a bad situation even worse. They're raising the rate for companies doing business internationally, saying we're going to raise the rate here, and every other country around the world promises in the future they will also raise their rate. Honestly, that reminds me of when I was in middle school around a group of guys that all came up with a bad idea, and all the guys would look at each other and say, great idea, you go first. And they're saying to reporters across the entire country, don't look at CBO score, don't look at any of the outside groups and how they've scored. By the way, we're doing a new tax credit for reporters. Just look at that. Examine the new tax credit for reporters that, hey, we're going to help you out.
The child tax credit and earned income tax credit provisions expire after just 1 year. Yet the Democrats have consistently said this is intended to be permanent. The SALT giveaway is front-loaded while corresponding offsets are back-loaded. And the boost in IRS funding is estimated to generate less than half of what the administration claims. And even that does not formally score under CBO rules. Remember the claim that there's zero cost here? Even if you take the bill with its gimmicks, it's got $400 billion of deficit, according to CBO. And if you don't take the gimmicks, it's got $2.7 trillion of deficit under the Penn Wharton study and $2.8 trillion of deficit under the CRFB study. And even the Tax Policy Center, which generally leans toward the Democrat side, has acknowledged how harmful the book minimum tax would be for capital investment in the United States. International tax increases would overwhelmingly hit American companies operating globally, not their foreign competitors.
You always hear Democrats saying corporations ought to pay their fair share. What you don't see in a lot of their tax proposals is it's just like everybody in small business is a tax cheat. We got to do everything we can to collect all the money that small business isn't paying. This is a blue state billionaire bailout.